Forward to the cloud. Okay. All right, and then I'll post this video in the 90-day.
Sure.
I think Joe was asking if I could record it, so if you want to copy it, find it there. Okay, so so it looks like you're playing what, this
Yeah, kind of
candle here?
correct. Yep. And I kind of wanted to get the breakout of the previous resistance as well. So I kind of, right in that area.
Okay. And actually
Before the double bottom, I kind of wanted to catch the breakout of all of that.
Okay, let me replay this. Okay, so we're gonna take this back to here.
Yep.
Okay, so you're actually playing this candle here, correct?
Yes.
But you set it up once these candles came in?
No, actually, I did set it up after that bear candle, and I just must have moved my tool over. Yeah.
Okay. Okay.
Yeah.
Okay. So originally we've kind of got a 10 EMA here. It didn't quite make contact, but close. You've got a little higher wick than you have lower wick.
Mm-hmm.
So you're right in the logic. I mean, if this breaks out and traps all of these sellers that cause this selling pressure, that's ideally what you're looking for. So all of that looks good so far.
And I was thinking too, even before the double bottom, there's all of that kind of just channeling over there. I thought the breakout of all of that as well would catch a few along with it, but that's kind of what I was thinking. Maybe that was too far.
It won't capture anybody that was over here, because this move would have already either paid you as a short and you would have gotten out, or it would have trapped you as a bull and everybody would have had their stops. Either if you're aggressive, you would have been here.
Okay, that's true.
Here,
Yeah.
maybe here, but you wouldn't have been like way down here as a bull.
Yep, I got it.
So all the players here would have already been out of the equation by then.
Yep, makes sense.
Okay, so right now, I mean, everything looks perfectly fine. Gave yourself a little bit of space here, which is fine. So let's go ahead and click this forward. See what we're looking at here. So far, so good.
I think that's when I got triggered right there.
Yeah, that would have triggered you in. So then you were in here. Okay. So you triggered in, basically immediately trapped. So indication number one that you might want to start playing defense, which I'm sure that's where your mind went because you moved your stop, which is
not immediately though. But yeah, I didn't move it until a few candles.
okay. Let me know when we get to the candle where you actually made the decision to move your stop.
Yep. Okay.
So now we're still looking at high wave. We're still above this is my 10 here, the one that's green red. We're still above the 10. This is my 100 SMA. We're still above that. So still a good sign, but we are making lower highs and lower lows. And it's still basically a lot of indecision in here, but more indecision on this bull candle than we had on the bear candle.
Mm-hmm.
So again, high wave candle, selling pressure, but still a little more indecision, but looking more bearish than bullish.
Yep, got it.
indecision again. Inside candle, so it doesn't really mean much. Indecision again, but still above the 10, touched right off of the 10 and moved. Now, since you got triggered in, what have you noticed on every single one of these candles, including the one that triggered you in?
The upper wick is bigger than the longer wick.
Yeah, you've
or
got
the
this.
shorter wick, and
You've got all this selling pressure. Every
Yeah.
time it comes up here to this spot, it either just barely breaks it and gets sold back off, or it doesn't even get there and gets sold back off. So this tells you right away, this trade is most likely not going to work the way you want it to work.
okay.
Speaking of which, I didn't ever set this. What was your, what did I have your target right? Were you going for like 2.68 or something?
No, it would have been 1.23. Or 1.2. I don't know why that target was so high on my chart.
Okay, so there we go.
Yeah.
Okay. So right away, you've got all of this selling pressure pushing this back down. And the reason it's pushing it back down is because of all of this that you were looking at earlier. This was old resistance before.
Yep.
You went down, you made a double bottom. So you should expect that it's going to be you should expect that it's going to be resistance here again.
Mm-hmm.
Doesn't mean don't take the trade, it just means expect it not to just burst through this and run to target.
Right. Okay.
So right now it's pretty much doing exactly what you could expect it to do. And this is going to be a hard area to get through. Now, if it gets through this area, you're home free.
Right. That's what I was hoping.
There's almost nothing here.
Right.
So that's really where you're going to feel your pressure right there. Another wick, another indecision. You've also got a lot of bull candles lining up here. Even though they're indecision candles, there's a lot of them. So you're at 1, 2, 3, 4, 5. So you can expect that at some point, there's going to be a bear candle coming in. Now, this is on a 3-minute chart. They don't necessarily mean as much on a 3-minute.
I
So
think
there's your bear candle.
that's where I moved my stop was, I believe, right there.
Okay, so then you moved it up to, I can't tell what this is, but it doesn't, so it was like right below.
Yeah, it was right around.
Right below this wick here, right?
Yeah, it would have been, yeah, yep, exactly.
Okay, so, and I know you said in your post that it almost seems like the markets know. They do know. And here's the simple reason why they know. You did exactly what 99.9% of traders are going to do. So did they know you put your stop there? No. But what they did know is that a large percentage of traders put their stop there. And you were just one of them.
Mm-hmm.
So if it's going to retest and come back, this is the spot it's going to come back to. And the reason people put their stop there is because you had a little bit of a pullback and then you went up, you got a break above that candle. Yeah. Hide this for just a second. You got a break above these candles, these wicks. What it did here is it brought in a bunch of bulls because some people weren't going to go bullish until here. They're going to wait for the breakout. Once they get this break above, they're like, okay, now I'm going to go bullish. So they go bullish, they get trapped, and where are their stops going to be?
Right where I put mine.
Right where you put your new stop.
Yeah.
So that's why you feel like the markets know, because they did know. They didn't necessarily know that you had your trade set up over here, but what they did know is a bunch of people went bullish right here. This candle trapped them and their stops were right there. And that's what they were hunting for.
Well, and they found it.
You just happened to get in the way, basically.
Yeah.
to prevent that, and I've been trading for 3 years, and I have just started doing this now because, you want to try to save as much as you can save, and you want to minimize your risk, and that's great. But I found myself spending a lot of time minimizing my risk at the expense of making profit.
Yep.
And that's a big no-no because I haven't figured out a way to deposit my small losses into the bank and actually be able to use them. So I had to kind of change my way of thinking. So what did I do? I actually went right back to Jeremy 101. I don't know if you've watched his videos yet, but way back in his first video from like 2015, I think it was, or something like that, he explains when he moves his stops, and he doesn't move his stops until he makes a higher high. None of these count as a higher high because this is all one wave. Does that make sense? You got in here, you haven't had a rotation yet.
Yep. Got
So
it.
until you get a rotation, which I made it here somewhere. I'll just use that. So you got in here. You're going to want to wait for something along these lines before you move your stop. You're going to want this rotation. So when you come up here, you get your rotation, it pulls back, and then you break this line. This is when you want to move your stop. Because now you've got rotation and you've come out above that rotation. What else is this called? S-curve.
Yep. Got it.
So if you start looking for those opportunities to move your stop once you have rotation and you get a break above it, that's going to save you a lot of that hard work.
Perfect.
Flip side of that is you may get stopped out for a full R. Because if this doesn't rotate and go higher, then you just get, you're up here, it starts to pull back, and it just goes all the way down.
Mm-hmm.
So you risk a full R. Now it might come down here and rotate after it stops you out at your full R, but that's the risk you got to take.
Yep.
If you want to stop losing small and start winning. Now, another thing you can do is put your stop someplace where the average person or most people aren't going to put it. So instead of putting it there, move it here.
Right.
If you feel like you have to move it, or you feel like that you have to play defense because of all these upper wicks, then move it somewhere where it's not going to be expected to be. Putting it right underneath wicks is never a smart place to put your stop because that's where everybody's going to go. So give yourself that extra room.
Well, that's excellent. No, that's exactly what I needed to hear and what I was looking for.
Now, another thing you can do, if you really don't have any confidence in the trade, slam your stop way up here. And literally put it right underneath that bearish wick. That way, if the trade's going to work, in spite of all these upper wicks, then you're giving it an opportunity to work. But what you're telling the stock is if you go below this bear candle on high volume, I'm not interested anymore, and you might as well stop me out for a small loss because I'm not going to give you a chance to take more money.
Yeah.
So either get really aggressive and play total defense or give it room to work. Putting it in the middle in here, you're giving it too much room to take more money from you, but you're not giving it enough room to work if it's going to work.
Yep.
This is kind of the danger zone in here that you don't want to mess with, because this is where everybody is putting their stop. They're thinking, well, I'm not going to put it under here because then I'm going to get stopped out. So I'll give it some room and I'll go underneath this wick.
Yep.
Because that's what everybody does. So once you stop doing what everybody's doing, you'll be a lot, you'll be a lot more successful. Now, the other thing is, and I don't know I don't know how long you've been trading, but you have this candle here. You had this bear candle here, wicked you in, took in some bulls, came down here, stopped out all of those bulls, because if they set that trade up with a tight stop, they wanted to take a breakout
Mhm.
above the candle that you wanted to take a breakout above. So they take this breakout, they get triggered in, it comes down here. Wait a minute, I'm looking at this wrong. No, I'm sorry, I'm looking at the wrong candles. Do I not have? Oh, I don't have all the candles on there yet. Never mind. Sorry, I should be looking at this one. You get the bulls wicked in. So if you were to have set up this trade, the breakout of all of this sideways action and all these
Yeah.
high waves, they just got triggered in, and then they got stopped out. So everybody that got triggered in here got stopped out here, right where you had your stop.
Mhm.
So they weren't hunting for people that got in over here. They were hunting for all of these bulls that got in on this candle right here. Stopped them out. As soon as it stops them out, like you said, it starts to run.
Yeah.
And that's why it started to run, because it already took all of the money from the bulls here. And not only did it take all of the money from the bulls here, but if you're trying to go bearish on this trade, you've got this, you've got this, you've got this, you've got this. So a logical thing to say is, maybe I'm going to go bearish right here underneath this wick, because I've got bullish indecision. So if it comes back and this breaks down, I'm in good shape. So you set this trade up. Pull this one over here. Where did my favorite song? It's right here in front of me. So then if you set this up bearish, so you have a stop up there. Maybe you're going for the retest of the double bottom.
Yep.
So these people set this trade up here, they get wicked in on this candle here. And the next thing it does is go up here and it stops them out. Nobody is going to set this trade up off of this candle here, this indecision bull candle, and put their stop like up here somewhere, because your risk reward doesn't make any sense. If you're going to put your stop somewhere, at best, you're going to probably be maybe at the very top of this channel over here, thinking, okay, I'm going to play it really safe, and I'm going to go above all of this congestion.
Right.
Well, that's exactly what happens.
That's incredible.
It's in the bears and runs. And this is actually a strategy that people play. I've started actually looking for this pattern. When you start to get, now this isn't perfect sideways congestion. I like mine to be a little cleaner. I like them to be a little more horizontal, not so much kind of going up at an angle.
Mm-hmm.
But I look for this pattern. I look for a place where the bulls get triggered in. If I'm going bullish, I want this candle where they get triggered in. I want a candle after that where they all get stopped out, and then it triggers in the bears, and then it runs and stops them out too. So I actually look for these higher and lower wicks, or vice versa if I'm going bearish. When I'm getting sideways consolidation like that,
yeah,
I look for those. I'll wait for this one, and then if I get this one, I will play off of, I would go bullish off of this hammer. And it doesn't have to be a hammer. What I'm really looking for is the wick that brings everybody in and traps them, and then the wick that stops everybody out that just got wicked in, and also wicks in people that are thinking, ooh, I'm going to wait for the trap and then I'm going to run it the other direction. So this is kind of a double trap. And then I'll play this candle here and
Wow.
run it up.
Yeah.
And a lot of times you'll find success with that because everybody's doing exactly what you did. You know, I mean, inadvertently you did it, but you know, you happen to put your stop right there where everybody put their stop trying to play these candles in here. And
Wow.
you just gotta, you know, you just kind of put your stop, your new stop right in where everybody was going to put their stops to take this trade, this breakout.
Yeah, that makes total sense. Excellent
And
breakdown.
I'm not sure if this would have even made the 1.2, but
No, it wouldn't have made it, but at least
it definitely got the one for sure. Oh, maybe not. Right to the penny. It looks like 274.35.
yeah.
Right to the penny. So, and this was, yeah. See, this was late in the day too. There's another little tidbit when you're this late in the day. Don't necessarily look for those 1.2s. People are trying to make quick money around this time of day because there's only what, an hour, less than an hour left in the markets. Well, I guess probably about an hour and a half when you actually got in.
Yeah.
Yeah. People are looking for quick money over here. They're not necessarily looking for home runs.
Got it.
So if you take these later trades, concentrate on the 1Rs rather than or at least take a large percentage at 1R. So then you can, you know, maybe you want to let some ride in case you get a late rally or a late flush, but take a large piece at 1R. And that way you're guaranteeing yourself something. So then you can slam your stop up into the green. And, you know, if you get stopped out at break even for the other 50% or 25%, whatever it is you leave on, you haven't lost anything. You just lowered your gain.
Yeah. True.
You don't have to worry about, you don't have to worry about losing any of the profits you've already locked in. Because there is a good chance that this could run, another $2 or whatever on one of those late rallies where people are balancing out their positions and everything. We see that all the time. But you don't want your main stake to be counting on that.
Right.
Because I don't think it goes. Yeah,
No.
it doesn't go any higher than that from the chart that you put in there. Oh no, it does actually. What am I? Okay, no, you might have actually.
Yeah.
Almost 1. No, it looks like right at 1.2. Or just shy. 27449. 27449. Yeah, right at 1.2. So you would have hit that, and then I think it rolls over from there. Yeah, it starts to pull back from there.
Yep.
So so if you take off a percentage at 1R, lock that in, leave the rest of it to run, which happens to get right up to 1.2. Now, depending on what broker you use, you might have gotten triggered out. You might not have.
Oh, sure. Right.
Because sometimes Thinkorswim will be generous and give me that right at the penny. Sometimes it's like, nope, you need one more penny because you're at the, what would that be? You're at the ask and not the bid.
Yep. Right.
And then it rolls down and I'm like, really? And usually I hold thinking, oh, it's going to give me that one more penny. Yeah, it rarely ever does.
Oh, this has been great. I really appreciate you taking the time to.
Yeah, no worries. It took me a long time to. How long have you been trading?
Well,
you're in the 90-day class, right?
Right.
So you're fairly fresh to it?
Was in trading about 5 years ago, but only like just buying a couple shares of stock and watching it go, up and down, not day trading or anything like that. So
okay.
I'm new to this type of trading. So
yeah. Yeah, this took me, it took me a long time to get this. So, if you pick this up now and, start working on it now, you're way ahead of the game.
No, this is really helpful. Even not on a particular trade just like this, but just moving stocks up in general. I mean, I
Yeah,
tried.
you will see that. And I don't know, I mean, I'm sure you see people all the time putting posts in there that, it whipped me out and then it ran the target and it, the market makers are hunting for me and all of that. And they are. You and a whole bunch of other people.
Right. You're just following along,
Exactly.
following the crowd.
And so if you put it in uncommon places, give yourself more room than you think you really need, odds are it's going to come down and it's going to get all of those people and then it'll run. Now, I actually have in my plan that I don't move my stop. And like I said, that was a Jeremy thing. I wouldn't move my stop until I saw this. Once I got a close on this candle right here, that's above this pivot point.
Mm-hmm.
Once this candle broke that and I actually got a new high based on the S curve, that's when I would come in and move my stop. And I would have moved my stop. Let me take that off of there. There we go. I would have moved my stop to probably right there. Because I'm so far up into the green and I've got to close above this. So now if people are going to get in, most likely they would put their entry here and they would probably put their stops in this area.
Right. Yep.
Either right where you did or maybe even here if they're trying to get aggressive, thinking that it shouldn't come back this far. And I'm going to be way down here just in case. Then once I get up here and I peel some off, then I'll get aggressive with my stops and say, okay, maybe I move it here. Maybe I even go to break even depending on, what my P&L looks like for the month or the day. But I don't get aggressive with my stops until I've peeled something off and I can use the percentage I've taken off and the stop movement to reduce my risk. But until then, I don't try to reduce my risk drastically with, moving that up to pivot points because that's where everybody's going. And that's a Jeremy thing. Now he does use the 0.7 and the 0.5 and I think 0.2 or whatever it is, but he doesn't do it until he gets a new high.
Got it.
So he wouldn't have considered this high wave a new high because there was no rotation yet. He waits for the rotation and the new high. Because until you get the new high, you might have this pullback, but that might not be the whole pullback. You don't know it's the whole pullback until you break out and you create a new high. Then you've got an actual pullback and it's starting to run for the next wave. Right. But until it breaks this high, you don't know if it's just going to consolidate sideways, maybe wick down a few more times. You have no idea what's going to go on in here. But once you get this, you still don't know. There could be a giant candle that comes in here and takes you out.
Oh, sure. Yeah.
For the most part, if it does that, well, you don't want to be in the trade anyway.
Right. Excellent.
And that's all just, candlestick sentiment. It's going to take you a lot longer than you think to get a firm grasp on that.
Well, I've taken it all in and all of the, been watching tons of videos and it's just all helpful. It's slowly, pieces are coming in. So it's getting there, but obviously just got to keep at it.
Yeah. And don't get frustrated. It's all kind of ebb and flow. Just when you think you've got everything figured out, something else comes up. And it does. I mean, it just, that's just the name of the game, really. And we're
Yeah.
trying to learn how to trade in the most difficult markets, I personally think, in history.
Wow.
Because, I mean, just think of all of all of the external factors that affect the stock market
Yep.
currently.
A lot of them.
That's never happened before.
Yeah, there's a lot of it out there for sure.
So if you can learn how to trade in these uncharacteristic, you know, whatever you want to call it, situations in the market, once the market stabilizes and starts doing what everybody's used to it doing, making money for us should be easy at that point.
Well, I'm gonna be looking forward to that then. Well, that's
Right?
good.
Yeah,
Right.
me too.
Yeah.
I mean, it kind of sucks for us now to have to learn in these difficult market times, but if we can
No,
learn it in this,
maybe
we're
it's
going
the
to be
best
okay
time.
later.
Maybe it's the best time to learn.
Yeah, oh, exactly. Because somebody that learned, 10 years ago, if they've never experienced this, and they've been trading and doing well at it, and now all of a sudden all this stuff gets thrown at them. I mean, they basically have to relearn everything.
Right.
So, yeah, it hurts now, but it's definitely going to help us in the long run, I think.
Excellent. No, very, very good. Again, I appreciate you taking your time to
Yeah, no worries, man.
help me. And you're wrong. This is RLT quality. So you didn't think it was going to be.
Wait, the audio's not. I have really bad echo and stuff in my office because I live in Florida, so everything's concrete.
Oh,
So the echo's horrible, and the mic is just the standard mic on the computer. And
oh, that all came out great for me. So,
yeah, awesome.
all right. Well, yep. Great evening.
Okay, you too, man. I'll post this video either tonight or tomorrow morning, depending on how long it takes the cloud to get it straightened out for me.
Yep. Sounds great. Thanks, Lucian. Appreciate
Okay,
it.
man, Grant. Have a good one.
You too. Bye-bye.
Bye-bye.